Welcome back to The Deep Dive, the show that helps you cut through the noise of earnings calls
We filter out all the fluff.
and zero in on the insights that really matter for you as investors.
Exactly.
So today we're diving into Oil-Dri of America,
ODC?
their second quarter 2025 earnings call. Ready to dig in?
Absolutely. Let's get our hands dirty.
Okay, so first up, the big picture. What jumped out at you from the headline numbers?
Well, they're definitely seeing some impressive growth,
Right.
particularly in their fluids purification.
And animal health divisions,
Double-digit growth in both.
which tells us what?
Well, it's not just about riding a rising tide.
Yep.
They're actually grabbing market share,
Interesting.
or maybe tapping into some really hot niches.
Makes sense. And then there's the Ultra Pet acquisition.
Right, their big move into the crystal cat litter market.
How's that playing out?
From what they're saying, the integration is a success.
Really? That's great to hear.
Yeah, which also says something positive about their management team.
Makes you think they know how to handle a post-acquisition phase.
For sure.
Now, all this good news is showing up in their financials too. Their gross margin jumped a whole 11% year over year.
11%. That's not just good, that's huge.
Definitely. And they're attributing it to their focus on those value-added products.
And some smart pricing strategies, too.
Okay, so what does that tell you?
Well, they've either figured out how to charge more, or they've significantly lowered their production costs.
Or both.
Yeah, probably both. But the real question for us as investors is,
Yeah.
can they keep those margins up?
Sustainability.
Yeah,
Always the key.
absolutely.
Now, there was one thing that kind of offset some of that profit growth,
Okay.
their effective tax rate. It went up to 21%.
From 16% last year, that's a pretty big jump.
Yeah, and it's because those crystal cat litter products, they don't qualify for a depletion deduction.
Ah, interesting. So even though it's just a tax detail.
It still has an impact on their bottom line.
It definitely does. But I think what's important here is understanding the why.
Okay.
And in this case, it's tied to their strategic acquisition. They brought in this higher margin product,
Right.
but it comes with a different tax treatment. It's a trade-off.
A trade-off to keep in mind. Now, even with that tax situation, their diluted earnings per share still grew 5% year over year.
5%. And remember, that's after factoring in their 2-for-1 stock split.
Right, which happened right in the middle of this quarter.
Exactly. So we're already dealing with some tricky comparisons because of the split.
Definitely.
But to see 5% growth on top of that, that's a strong signal.
A really resilient business. Okay, and let's not forget their EBITDA,
A solid $22 million for the quarter.
which basically tells us
Their core operations are humming along.
and generating a lot of cash.
Precisely. And that's something that investors should always pay attention to.
Absolutely. Now, they also made a move that I think suggests some really smart financial management.
Okay, what's that?
They paid off $5 million of that short-term debt from their credit facility.
Oh, the one they used for the Ultra Pet acquisition.
Exactly. So now that facility's completely undrawn and available.
Yeah, it's a great sign. Shows they're being responsible.
Right. It gives them so much more flexibility.
Yeah, whether it's for future investments or maybe even more acquisitions down the line.
Now, let's dig into some of the specifics of their strategy. They keep talking about this Moneyball approach.
Yes. Their data-driven strategy.
Okay, but how's that actually impacting their business, in concrete terms?
Well, they're actually putting some hard numbers behind it.
Okay, I'm listening.
So their Q2 2025 tonnage, it was 30% lower than their record back in 2006.
Wow, 30% less.
But here's the picker. Their sales in the same quarter more than doubled.
Seriously.
Yeah, they went from around 51 million in 2006
To over 102 million this year. That's incredible.
Right. They're basically doing more with less.
So much more efficient.
And that efficiency translates directly into profits.
Okay, let's talk about that. What's the story with their gross profit?
Brace yourself. In Q2 2025, it was 7.5 times higher than in 2006.
No way.
Yeah, from 9.8 million to a whopping 75 million.
That's insane.
And this is what Moneyball is all about.
So they're not just making incremental improvements.
No, they've completely transformed their business model.
Wow. That's a big statement.
And it's backed up by those numbers.
Okay, I'm starting to see the power of this Moneyball thing.
It's about being strategic, understanding your data, and making really smart decisions.
Let's shift gears a bit and talk about the Ultra Pet acquisition. That crystal cat litter business.
Okay, sure.
They say the integration's going smoothly, financials are in line with their expectations. What should we be keeping an eye on here?
Well, integration's just the first step, right?
Sure.
The real test is whether they can turn this acquisition into long-term growth.
Make it work for them?
Exactly. Can
Yeah.
they really leverage those assets?
Find those synergies. Okay, so what are the key milestones we should be watching for?
Well, they mentioned that retail shelf resets usually happen in the fall and winter.
Okay.
So they're not expecting major distribution gains for Ultra Pet immediately.
Right, because of the retail cycle.
Exactly. But they're actively working to expand for next fall.
Okay, so they're playing the long game here.
They are. And that tells me they're not rushing things.
Being strategic.
They understand how the retail world works.
And are planning accordingly. Makes sense. Now, what's encouraging is that they've already gotten some positive feedback from customers.
Yeah, they're hinting at even more distribution gains down the line.
With existing retailers.
And potentially new ones, too.
And they say sales velocity for the new products is strong.
Which is always a good sign.
Right. Shows people are actually buying this stuff.
It's early, but those are definitely positive signals.
Okay, let's move on to their fluids purification business. They're seeing really strong demand, especially in North America and Europe.
Makes sense. Those are the leading regions for renewable diesel production.
And that's obviously connected to what oil drilling does.
Oh, absolutely. Renewable diesel relies heavily on purification processes.
To remove impurities, make sure the fuel's top-notch.
Right. And that's where Oil-Dri's products come in.
So, as this whole renewable energy thing keeps growing,
Oil-Dri's in a great position to benefit.
they're saying they expect demand for their absorbents to remain stable.
Stable with the potential for growth as more plants come online.
So, pretty steady revenue stream for them.
Yeah, it looks like a solid foundation for that segment.
Now, they did mention competition,
Of course, there's always competition.
but they emphasize that their mineral is really good at what it does.
Right, it efficiently removes all those contaminants and metal.
And that's crucial for protecting the catalysts they use in production.
Exactly. So they're really highlighting their technical advantage here.
Okay. And it sounds like they're serious about capitalizing on this opportunity. They've already built more capacity
And they're even thinking about entering the Latin American market.
in a couple of years.
So they're thinking globally.
Makes you think they see a lot of long-term potential in this segment.
Definitely. Now, how about we talk about Amlon?
Their animal health division.
Yeah, let's dive into that.
Their sales have been on a tear since early 2024, and they kept up that momentum this past quarter.
Strong growth, consistently.
So what's the secret sauce here?
Well, it could be a lot of things. Maybe they've got some great new products.
Okay,
Or maybe their sales and marketing teams are just killing it.
makes sense. Or maybe it's just a really favorable market for animal health right now.
Could be a combination of all of those.
Probably is. They did mention that their sales and technical teams are really strong.
And that they've got a robust supply chain.
They're proud of their product quality, too.
And the value they add to their customer relationships.
So it sounds like they've got all the pieces in place.
Definitely. It's not just about one thing.
It's about the whole package. And it seems like Oil-Dri is really committed to this Amlon business.
Absolutely. They explicitly said so.
They see it as a key growth area. Now, let's talk about their manufacturing infrastructure.
Okay, sure.
They're making a big commitment to reinvesting in that.
Replacing old equipment, making improvements, that kind of thing.
And why is that important for a company like Oil-Dri?
Well, it's about staying competitive.
Okay.
They've got to keep their operations running smoothly,
Right?
and they need the capacity to grow.
Makes sense. So they're aiming to address their infrastructure needs
But also to increase their production capacity,
and boost their cost efficiency.
and all at the same time.
Ambitious.
But they seem to be pulling it off. They even talked about a recent project where they completely revitalized a plant.
Oh, the one that makes agricultural products.
Yeah. They said it significantly increased their capacity.
So they're putting their money where their mouth is.
Definitely. Now, they did mention one little hiccup. Their ability to forward purchase equipment is a bit limited.
Oh, why is that?
A big chunk of their capital expenditures are tied to construction services.
Ah, makes sense. Those are harder to plan for in advance.
Yeah, construction costs can be tricky.
So they might have a little less control over that part of their spending.
That's something to keep in mind.
Okay, so what are their top priorities for the rest of the fiscal year?
Well, they're laser focused on funding those strategic growth initiatives.
Especially in their manufacturing operations
They want to make sure they have enough capacity going forward.
beyond 2026.
Right. They're thinking long term.
Okay, and what about acquisitions? Are they still open to those?
Oh, yeah. They specifically said they're looking for the right opportunities.
building on their success with UltraPet.
Exactly. They want to find businesses that align with their strategy.
So what kind of companies would be a good fit?
It's hard to say for sure, but given their focus on value-added products,
Yeah.
they might look for companies in adjacent markets
Okay.
or businesses with complementary technologies,
Makes sense. They could also target companies that could expand their distribution network.
or maybe even their product portfolio.
Now, what about tariffs? They address that too,
They did. They're not expecting a big direct impact.
because most of their operations and sales are here in the U.S.
And they've got that vertically integrated supply chain.
But couldn't there still be some indirect effects?
Oh, absolutely. The global economy is a complex beast.
And their customers might be affected.
Right, so they're not completely immune.
But they say they're taking steps to minimize any potential problems,
They're talking to their business partners.
trying to work things out.
It's a wait-and-see situation.
One of those things we just have to keep an eye on. Now, one thing they're not too worried about is rising natural gas costs.
They've been pretty strategic about managing that
They forward purchase a good chunk of their gas needs.
to buffer themselves from price swings.
Smart move. And they're always looking ahead
They're monitoring those market trends years in advance.
and factoring those into their pricing models.
And their financial models, too.
So they're thinking long term.
Always thinking ahead.
Okay, now let's touch on the Canadian market.
Okay, sure.
They had some softer sales there this quarter,
In their cat litter and industrial floor absorbent products,
but they say it's due to some temporary issues
like weather.
and timing with a major retailer,
So not necessarily a cause for concern,
especially since they've got that new distribution deal with a major Canadian retailer.
which is already shipping this quarter.
So that could boost their sales going forward.
Definitely something to watch.
And their Canadian manufacturing facility.
The one near Montreal,
It gives them that made in Canada advantage.
which could be huge, especially with all the trade talks going on.
Consumers often prefer local products.
It might even help them win some government contracts.
Now, let's talk about margins.
Okay, what about them?
They've achieved 10 consecutive quarters of margin expansion,
10 quarters. That's impressive.
despite rising input costs.
That's the even more impressive part.
So what's their secret?
Well, they're crediting those operational improvements from all their facility upgrades.
Okay.
They're seeing cost reductions and efficiency gains.
Which gives their sales teams more power.
Exactly. It's a virtuous cycle.
And their service levels are consistently above 99%,
In your consumables division,
which helps them in their pricing negotiations with retailers.
retailers love reliability,
It makes their lives easier.
and that translates into better pricing for Oil-Dri.
So they're really attacking this from all angles,
They're understanding customer value, shifting towards those higher value businesses,
like fluids purification and Amlon.
and their sales teams are doing a great job managing those margins.
It's a comprehensive approach. Now let's talk about lightweight cat litter.
Okay.
That segment is growing thanks to new products and promotions.
But Oil-Dri's market share has actually dipped a bit.
Yeah, slightly. But they don't seem too worried about that.
They're more focused on growing the overall lightweight category.
Interesting. So they're okay with a smaller slice of a bigger pie.
They're thinking long term.
And they see opportunities for both their branded and private label products.
It's a two-pronged approach.
Capture a wider range of consumers.
And price points.
Okay. Now let's talk about their investments in data analytics.
They're serious about taking Moneyball to the next level.
It's a multi-year project,
They're bringing in new people.
implementing new platforms and tools.
It's a big investment.
But they believe it'll pay off.
Give them even more insights into their business.
Help them make better decisions.
And ultimately, drive more profit.
Okay, now for a quick look at their receivables.
Okay.
Their day sales outstanding has ticked up a little,
Because more of their sales are coming from international businesses.
but their percentage of current receivables is still strong.
And it's trending in the right direction.
They're not seeing any red flags with their customers.
No signs of financial stress.
So, all in all, it looks like their credit management is solid.
Definitely.
Okay, last but not least, let's talk about the possibility of a recession.
Right.
How do they see that impacting their business?
Well, they think consumers might trade down to value-oriented channels.
Where Oil-Dri happens to have a strong presence.
Exactly. So they're not expecting a mass exodus from their brands,
They believe in the power of brand loyalty.
especially in the cat litter category.
So their business model might be more resilient than some others.
That's their thinking.
Okay, before we wrap up, let's have some fun.
All right.
It's time for our This is not financial advice segment.
The disclaimer is key.
Always. We're just brainstorming here.
Throwing out some wild ideas.
Okay, so based on everything we've discussed about Oil-Dri,
Their Moneyball strategy, their focus on value-added products.
their successful integration of UltraPet.
What's an outrageous but plausible trade idea?
Hit me with it.
Okay, here goes. What about a long position in a logistics company?
Okay, a logistics company.
But not just any logistics company. One that specializes in handling premium goods.
High-value stuff.
Exactly. And particularly those sold online.
Through e-commerce channels.
Okay.
I'm following.
So the thinking here is that as Oil-Dri keeps shifting towards these higher value products,
Like that premium cat litter.
or those specialized industrial absorbents.
And maybe they'll even start selling more directly to consumers.
Right. That's going to create a need for specialized logistics services.
Makes sense. Now, how do we hedge this?
How about a short position in a traditional trucking company?
Okay.
One that mostly handles bulk commodity transport.
The old school way of doing things.
Exactly. Because as the world moves towards these value-added, lower volume goods,
The demand for bulk transport might start to shrink,
so it's a bet on a shift in the logistics landscape.
fueled by companies like Oil-Dri,
Outrageous. Maybe?
but plausible.
I think so.
Okay, so to sum up our deep dive into Oil-Dri,
We've seen a company that's really optimizing for value
successfully integrating a major acquisition,
and positioning themselves for growth in some really interesting sectors.
like renewable diesel and premium pet care.
And they're doing it all with this data-driven Moneyball approach.
They're not just riding the wave, they're creating it. What key insights will you be taking away from this deep dive?
Remember, this is just our analysis.
Do your own research. Dig into the details.
Make your own informed decisions.
And as always, our trade ideas.
Purely hypothetical.
This is not financial advice.
It's just food for thought.
Thanks for joining us on the deep dive.
We'll see you next time for another earnings call breakdown.
Until then, keep diving deep.
And stay curious.
We'll see you soon.
Bye for now.